So the other thing I'd like to take a look at is the volatility that we've seen in the past, because one thing I want to make clear is this is something that's gone on before. And so we're going to go ahead and take a look at something else here. And that is this chart right here. This has to do with the market going back to 1990. And you'll notice that there's bars and there's these little whisker things. What this shows you is over the course of years, there's been all kinds of events we can talk about. You may remember the Gulf War. We went to war, remember, against Iraq. You may remember in 2000, 2001, the dot-com bust right around here in Silicon Valley. I lived through that. I remember it was serious. It was intense for many years. You may remember 9/11. You, of course, remember the 2008, 2009 financial crisis and long enduring recession. So during periods of time where we have problems, where we have these issues, these crises, if you will, you can see tremendous volatility in a particular year. Consider this, 2008, the low was down almost 40%. And at the top of 2009, you had the market up almost 80%. So think about that. Within a roughly 2-year period of time, it was less than that, it was like a little over a year and a half, you had these tremendous swings. But if I asked you today, where was the bottom in the recession? Some of you may know. It was in March of 2009. In fact, I remember when that happened. The absolute bottom right there of that whisker was March of 2009. Was it obvious that day that that was the bottom? No. Did we all know that was the bottom? And so we went ahead and took all that cash and all those bonds we had and cashed them all in and bought all stocks that day? No. So it's impossible for anybody to tell you or to predict where the bottom or where the top is. It's just part of the investing world. What I want to point out about all these differentials too is that within a particular year, you can have a great amount of up and down. And so this year we started out somewhat up. As we just talked about, it's now down quite a bit. But where do we finish? If you look at a year like a 2001, where we had a war, we finished down. If you look at a year like a 2009, where things were really dire, we finished up. So you just really don't know where this is going to go. And that's my point. I just want you to think about intra-year, as you start to think about these things, as you invest in stocks, if you're looking for higher returns without any risk, right, you don't invest in stocks. If you want risk and you want higher returns, you invest in stocks. And this is the type of volatility that's normal, certainly within past experience. And so what you're experiencing right now, even though it feels different, even though it feels more severe, it's not, and it's not unprecedented. So that's my big point about what you're seeing here. The other point I'd like to make about this is if you didn't want to take any risk, you didn't want to participate in any of these swings, what is your alternative today? Well, it'd be a 30-day T-bill. And what is the T-bill paying? Well, if you buy a 10-year T-bill, you're getting 0.8 something, which is really not much for 10 years. So that's why people have moved to equities, because they're looking for a little bit better returns. Hey everybody, it's David Hollander, the Sandman. Thanks for watching our video, and make sure you subscribe and tell your friends today.